If your goal for getting into real estate investing is financial freedom and making the absolute highest cash flow per dollar invested, then this video is going to be perfect for you. I'm going to walk you through the 8 factors or 8 characteristics that when combined lead to an area that provides incredibly high cash flow. And I'm even going to share a couple examples at the end of actual locations that work really well for this. Because once you find an area that has as many of these 8 factors as possible, you found an area that's going to get you to financial freedom as quickly as humanly possible. All right, so let's go ahead and dive into the first factor that leads to the high cash flowing location, and that is areas just outside of larger cities. So typically we recommend not purchasing directly in a city itself. This is where you're typically going to find the highest price points, the most regulation, and generally it's just the most difficult to do short-term rentals. However, we still target these population centers, but we buy just outside of the city limits, where typically you'll find there's communities and towns that are much more short-term rental friendly and make it a lot easier to conduct your business. Speaking of business, the second factor is picking a business-friendly area, a state or town or municipality that's business friendly. For example, we used to invest downtown Chicago. We lived and invested in Chicago. We found that it was very difficult to get things done in that environment. There's high taxes and fees. There's lots of red tape. There's a lot of regulation. And so we decided to move from Chicago over to Northwest Indiana, about an hour outside of Chicago. And what we found was that everything is much more streamlined. There's a lot lower regulation, a lot less red tape, a lot lower taxes and fees, and so it was a much easier environment to grow our business over the last 5 years. Local draws. So you're gonna look for places. Most people think that you need to buy in a place that has a national draw in order to get guests, like a Disney World or something like that close by. What we found is that if you're close to these population centers, within an hour drive of a larger city, and you have some local draws that draw people to that area from that larger city, you still get great occupancy and it drives up your nightly rate. So this could be anything from museums to restaurants to a water park to a lake to, we have a casino in town, we've got a big outlet mall. So any of these types of local draws will really draw people to your area. The third factor, and probably the most important, is to hit the like button on this video to let the algorithm know that you're getting value out of it. But actually the fourth factor is positive future projections. So going back to my example of Chicago, when we were investing there, I couldn't really truthfully say that I felt like Chicago was going in the right direction to where I was going to be in a much better place with my investments 20 years down the road. The taxes were increasing to an unaffordable level. The population was declining. People were moving out of Chicago. Crime rates were increasing. Like, all these factors were leading me to feel like it's kind of heading in the wrong direction from a long-term investment standpoint. And that's what these are. You're going to be holding them for the long term. So I wanted to be in a place where, like we are right now, where it's not like a utopia. There's still all kinds of challenges, but I feel like the decision making is heading in the right direction, and the factors that will lead to the area getting better are in place. And so you want to pick areas that you feel like 20 years from now, it's going to be even better than it is today. And that's where you'll see the best performance over the long term. The fifth factor is picking an area that has short-term rental friendly rules. So if you just pay attention to the mainstream media, you would think that every area in the whole world is regulated to death, because that's all they talk about is all the new regulations that are coming online. But typically they're focused on the larger markets. And that's where you're typically seeing a lot of the short-term rental rules developing. In a lot of the smaller markets, there's not nearly as much regulation. And so picking an area that has already established rules, you don't want to pick an area that has no rules and all of a sudden the rug could be ripped out from under you, but they have established rules, and it's rules that you can live within. So there's some areas like where we invest where you just have to register with the city and let them know that it is a short-term rental, so that if something happened at that property, they could reach out to you, but there's no restrictions. There's no fees, there's no inspections or anything like that. It's very short-term rental friendly, and that's the type of place I recommend. The sixth factor is properties that work as long-term rentals as well. So what you see a lot of times with short-term rental investments is that people default to these higher end, more luxury short-term rentals. And those can have their place, but from a risk factor, there's not a whole lot of backup options if something changes. So if regulations change, like we just talked about, or if there's another COVID lockdown or something like that, what's the backup option? And so if the backup option is everyone's gonna sell their property at the same time, it's probably not a good one. Or if you're gonna try to use it as a long-term rental, but it's $1 million property and it's gonna hemorrhage thousands of dollars of negative cash flow per month, probably not a great backup option. So every property that we buy works as a long-term rental as well. And so if you target these lower cost, especially multi-unit properties, which is several that we own, those tend to work really well as long-term rentals if you ever have to convert them. The last two factors tie in together. So the first one is a low average purchase price, which you can Google any location, any town, and say, what's the average purchase price, and figure that out. And that's in combination with the highest nightly rate and occupancy rate. So you want to look for the most favorable differential between those two. So low average purchase price to the highest average nightly rate and occupancy combination. And if you find that, that's where you're going to find really high cash flow. So if you can find an area that has as many of these 8 factors stacked on top of each other as possible, then you've just found an area that's going to get you to financial freedom in the fastest way possible. So here are a couple of real life examples. A lot of people are afraid of short-term rental regulations or rules, but I feel like you can actually use these to your advantage and make a lot of money as a result of short-term rental restrictions. So how does this work? So this is where we actually invest. We invest in Michigan City, Indiana, and right next door, you've got New Buffalo. And most people who live in the Chicago area are familiar with New Buffalo. They think of New Buffalo as the vacation town to kind of get out of the city and go on a long weekend or a week vacation and stay near Lake Michigan. They don't think as much of Michigan City for that type of thing. However, New Buffalo a couple years ago enacted a cap on short-term rentals. So they only allow so much. So if you think about the supply-demand differential, they restricted the supply, but it didn't do anything to demand. There's still just as much or more demand every single year to stay there, to vacation there, but there's no longer enough supply. So what people do then is they search on Airbnb and a map pops up on Airbnb that shows all the top short-term rentals, and there's not nearly enough for the people that want to stay in New Buffalo. So what Airbnb does is zooms out and shows you all these options in Michigan City as well. So we get all the spillover demand booking in Michigan City. And this works in lots of different locations throughout the US. Another example is Atlanta. So Atlanta enacted a rule where people can only own 2 Airbnbs or short-term rental units total, and 1 must be their primary residence. You also must be a resident of Atlanta and pay a $150 annual permit fee and pay an 8% tax rental fee. So this is for the city of Atlanta itself, but as you know, and as you can see on this map, there's lots of towns just outside of Atlanta city limits, and I can guarantee you that a lot of these towns are much more short-term rental friendly and probably a much lower price point. So people who want to travel to the Atlanta area are going to search there, and if you buy just outside of the city limits or close by to Atlanta, you're going to get all of that spillover demand because they're restricting supply in that area by creating these regulations. I just recently created a guide called The Ultimate Guide to Selecting a Ridiculously High Cash Flowing Short-Term Rental, and you can download that for free at the link below. But it kind of takes what I just went through a step further. So if you're interested in this strategy, I'd highly recommend checking out that guide. And also, you can ask any questions in the comments below. I respond to pretty much every single question personally in the comments. So if you have any questions after I've gone through this, feel free to drop that in the comments below. Thanks for joining me. God bless, and I'll see you in the next video.